I spent 36 years in banking and finance. And do you know the one question that most investors ask me? It is, when should I sell my mutual fund? Most investors sell their mutual fund for the wrong reasons. Today I'll show you the only 4 reasons that actually matter when you sell your mutual fund. Let me tell you a truth. You are having a mutual fund and you are thinking of selling it. Well, by the end of this video, you will know whether that impulse is real or it is a mistake. Here's what most investors do. They sell their mutual fund for 4 reasons. Reason number 1, because the market feels quite expensive. Reason number 2, because the fund has underperformed for a year. Reason number 3, because the AUM is too big. Reason number 4, because things just feel off. Almost none of these were a reason to sell. And some of them are the exact reasons that you should be holding on to them. Let's break them down. First, if there is a genuine need. If you had built a separate emergency fund, you should never be forced to break your mutual fund for a surprise expense. I told it earlier in my videos also. The cushion exists so investments keep compounding. But if your real goal has reached the house construction, the child education fund, then yes, you can take your money out. The invested day has come and congratulations to you, you have done it. But here's the key. The need has to be genuine. A want is not a need. If you're selling because you feel like it, it's not one of the 4 reasons. Here's the reasons most investors miss. It's called staying true to label. If a fund calls itself a value fund, but is quietly holding on to high momentum loss-making startups, that's a style drift. That stock belongs to a growth fund, not a value fund. If a fund is doing something different from what its name promises, that's a problem, even if it's making money, right? Because you signed up for a strategy. If the strategy isn't there, exit the fund immediately. Third reason, if the fund manager changes. If you bought a fund because of a specific manager, their track record and their approach, and they retire or leave, then that's worth a fresh review. You bought them not just because of the fund's name. Once they are gone, ask, does this fund still deserve my money? Fourth, if you have decided on a category isn't for you, say a hybrid fund, a narrow sector fund, or a ULIPs type bundling, then holding one is itself a reason for you to exit. I keep my money in broad-based options like a flexi-cap fund, a mid-cap fund, or a broad-based index fund. Because if I could time the sector cycles and pick winners in IT or banking, I'd just buy those stocks directly. The sector bet doesn't make sense to me. Does it to you? So here's the takeaway. Don't fear short-term underperformance. Don't fear market levels. Don't fear the AUM size unless it is a small cap fund. What you should fear is the fund that stops doing what it promised. If your goal is met, if a real need arrives, if the fund drifts from its mandate, or if the manager you trust leaves, these are your 4 exits. Everything else, well, that's just noise. If you found this useful, like, share and subscribe. And if you want a clear picture of how to build a wealth plan that actually holds up, we look at your goals in a 1-to-1 free strategic call. Details in the description. This video is made for educational purpose only. Disclaimer in the description. See you in the next video tomorrow. Thank you.